So imagine for a second, right, that you are sitting down at a really high-stakes poker table.
Okay, setting the scene.
Yeah, you've got your chips all stacked up. You've studied the game. You know the odds backwards and forwards. But as soon as the dealer pitches the cards, you realize there's this massive structural problem.
Which is usually the case in these scenarios, right?
Exactly. Because the other players at the table, so the institutional giants, the hedge funds, the market makers, they are all wearing like mirrored sunglasses. And there is a giant mirror right behind your chair.
Oh, wow. So they can literally see everything.
Everything. They see every single card you are holding, every bet you're preparing to make, your entire stack. But when you look across the felt at them, nothing. Just blank sunglasses.
But you can't see their hands at all.
No tells, no cards, nothing. You are effectively playing a high-stakes game entirely in the dark.
And, I mean, that structural disadvantage has basically defined the modern retail trading experience for decades now.
Yeah, which brings us to the topic of today's deep dive. Because everyday traders are, for all intents and purposes, flying totally blind.
They really are. I think we often mistake having a shiny brokerage app and some candlestick charts on our phone for actually seeing the market.
Right. It feels like you have the data.
It does. But looking at a standard chart is really just looking at the past. I mean, it shows you where the price was. It tells you absolutely nothing about the invisible mechanical forces that are dictating where the price is about to go.
Which is exactly our mission today. We are unpacking a stack of sources detailing how this new platform, it's called TradeIQ, is attempting to cure this exact flying blind problem.
Yeah, it's fascinating stuff.
It really is. We're going to explore what happens when you hand a retail trader a literal cockpit of, institutional grade insights.
Because when we talk about flying blind, it really comes down to a lack of visibility into three crucial mechanical drivers of the market.
Right, the stuff you can't see on a basic line chart.
Exactly. So first, everyday traders generally just can't see where massive institutional money is actively rotating in real time.
The actual money flow.
Right. Second, they have zero visibility into where dealer gamma walls are sitting.
Gamma walls.
Yeah.
Which we will absolutely get into because those are those hidden structural barriers we were talking about.
Yeah, they're huge. And finally, they struggle to instantly identify, structural breakout setups that are forming across the thousands of equities actively trading at any given second.
It's just too much data for a human to process.
Completely.
And the sources we are looking at today, they give us a really clear glimpse into this TradeIQ platform. They keep describing it as a high-density interface.
Which is an understatement, honestly.
I know. Looking at the primary dashboard screenshots in the source material, it genuinely looks like the cockpit of an F-35 fighter jet.
It's intense.
There are 8 distinct engines running at once here. Let me just list them out. You've got market sentiment, RS leaders, volume intensity, pattern logic, options flow, the GEX gravity well, which sounds super sci-fi live, voice squawk, and a conversational TradeIQ analyst AI.
It is a massive amount of data processing simultaneously.
Yeah.
But the goal of those 8 core modules isn't just to provide a bunch of noisy alerts,
Right. It's not just a fancy ticker tape.
Exactly. It's to map out the underlying mechanics of the market across multiple dimensions.
Well, let's start with the macro view then, the market sentiment module. Because I'm looking at this, and it is definitely not your standard, green means the market is up, red means the market is down kind of thing.
No, it goes way deeper than that.
It's tracking multi-sector bullish and bearish metrics at this really granular level.
What it's doing is visualizing market breadth. And in trading, breadth is everything.
How do you mean, beyond just the S&P 500 being up 1%?
Yeah, exactly. Because a standard index, like the S&P, it can look flat or even slightly green on the day, which totally masks the fact that under the hood, massive sector rotation is happening.
Ah, okay. The money is moving around underneath the surface.
Right. And the live session data provided in our sources paints a really specific picture of this. You can instantly see the exact structure of where capital is flowing.
Yeah, looking at this snapshot here, consumer discretionary, so XLY ETF, and the Magnificent 7 tech stocks, which they label MAGs, they're acting as massive leaders.
They're showing heavy structural outperformance.
The data shows Amazon, ticker AMZN, is absolutely tearing it up in this session, up 14.79%.
Which is a massive move.
Huge. But the dashboard doesn't just show the winners, right? It visually highlights where the money is bleeding out to.
Which is arguably more important.
Yeah, in that same view, DRAM memory and biotech, the XBI ETF, they are acting as heavy laggards. They're flashing deep red, down over 3% and 4%.
And recognizing where capital is not flowing, that's often more valuable than seeing the leaders.
Because it keeps you out of bad trades.
Exactly. If you're sitting down to trade a biotech stock on a day when the XBI is acting as a heavy laggard, you are essentially swimming against a massive institutional current.
You're just asking to get run over.
Pretty much. But the interface doesn't just stop at that macro sector level.
Right. That's the part that really stands out to me. When you zoom in on the specific technical setups flagged on the sentiment dashboard, the granularity it's intense.
It's incredibly specific.
It doesn't just tell you Microsoft MSFT is having a nice green day. The system explicitly flags it as being in a double bottom breakout.
Yeah.
It flags Tesla, TSLA, as sitting at a support resistance retest. and it identifies Apple, AAPL, as a major red drag on the broader tech sector.
Think about the cognitive load reduction there for a second.
It's massive.
A standard retail trader trying to figure out that exact narrative, they would have to bounce between half a dozen different charts, run separate scans, check news feeds.
Staring at Twitter all day.
Exactly. And manually draw lines just to see that Microsoft is breaking at double bottom.
Which is a pattern indicating that sellers tried to push the price down twice, failed, and now buyers are taking control, right?
It's a very specific bullish setup. And by visually categorizing leaders versus laggards and explicitly labeling those structural setups, the platform basically maps the money flow for you.
Okay, but I have to push back on this high-density concept for just a second.
Sure, go for it.
If I am a trader who is used to just looking at a really simple line chart on my phone, and you suddenly throw an endless wall of tickers, 3D charts, 8 different modules, real-time AI analysis at me, doesn't that just create a new kind of blindness?
Like flying blind through information overload.
Exactly, like sheer paralysis by analysis.
It's a fair point. And information without synthesis is absolutely just noise.
Right.
If these 8 modules were disconnected from each other, it would be totally paralyzing. But the underlying philosophy of a high-density interface like TradeIQ is synthesis.
So it's about how they connect.
Exactly. The value isn't the raw data itself.
Nope.
The value is forcing the trader to see the structure of the market as an interconnected ecosystem.
So you aren't meant to just stare at every single blinking light on the dashboard.
No, you are meant to read the overall narrative the dashboard is handing you.
Okay, so the narrative tells me the weather. It tells me consumer discretionary is hot, Amazon is ripping, biotech is cold, but knowing the weather doesn't actually tell me how to drive the car.
No, it doesn't.
Knowing the macro sentiment is really only half the battle here. If you want to trade like an institution, you have to know where the roadblocks are.
The invisible barriers.
Right, those invisible barriers that are going to stop a perfectly planned trade dead in its tracks.
Which is why the platform integrates what is arguably its most complex engine, the GEX gravity well.
The GEX gravity well, I mean, it literally sounds like something out of a deep space sci-fi novel.
It really does. But it's actually mapping out real-world institutional support and resistance levels.
Okay, let's break this down mechanically for everyone listening, because this is vital.
So GEX stands for gamma exposure. And to understand why this matters, we have to look at the mechanics of the options market.
Okay, options.
When you buy a call option, so that's a bet that a stock is going to go up, someone has to sell you that contract.
Right, there has to be a seller for every buyer.
Exactly. And usually that seller is a massive institutional options dealer or a market maker.
But those dealers, they aren't in the business of gambling. They don't want to take the risk that you are right and they lose millions of dollars paying out that bet.
That is exactly their dilemma. They want to collect the tiny fees and remain completely neutral.
Like the casino taking the rake.
Pretty much.
Yeah.
And to stay neutral, which in finance is called delta hedging, they have to buy or sell the actual underlying stock based on how the price moves.
Okay, so their actions in the options market force them to act in the stock market.
Yes. So if a massive amount of call options are clustered at a specific price level, the dealers have to aggressively buy and sell the stock as it gets close to that price just to manage their own risk.
And that activity is what creates those walls.
Yes. This hedging activity creates massive invisible walls in the market. The GEX gravity well visualizes this by mapping out delta gamma call walls and put walls.
Okay, let's use the specific case study from the sources to make this super concrete, because they provide a real-time institutional positioning map for Micron ticker MU.
Perfect example.
So the current price in this snapshot is hovering right at $812.47.
Okay, so right above that price, at $835, the system identifies a primary ceiling anchor. It actually labels it a heavy call wall magnet.
A ceiling at $835.
Right, and down below the current price, at $800, there is a primary floor anchor providing heavy put wall defense.
Okay, so if I'm picturing this visually, it's almost like a bowling alley.
Bowling alley, I like that, yeah.
Right, like the $800 put wall and the $835 call wall, those are the bumpers on the side of the lane.
Oh, I see where you're going.
And the stock price of Micron, that's the bowling ball, and it is essentially trapped in the lane. It's just bouncing back and forth between those two bumpers because the dealers are constantly buying at the floor and selling at the ceiling just to keep their books neutral.
That analogy perfectly captures the mechanics, actually.
Oh.
The price is magnetically pulled toward these high concentration zones because of the sheer volume of options sitting there.
But it can't break through them.
No, it struggles to actually break through because the market maker's hedging activity acts like a literal physical barrier, just suppressing the momentum.
And what makes the TradeIQ interface powerful here is that it doesn't just plot these points on a graph and leave you to figure it out. It provides an automated text analysis of the conditions.
It reads the data for you.
Yeah, reading the actual analysis generated for this specific Micron setup, it explicitly states, quote, dealer gamma positioning exhibits strong defensive support at the $800 floor. Consolidated sideways drift is expected until volatility contracts.
It's literally telling the trader, hey, don't expect a massive breakout today. The bumpers are too close together and the walls are too thick.
Which is incredible. That single insight prevents a trader from buying a breakout that is mathematically doomed to fail.
Exactly. It stops you from making an unforced error. But the module actually goes deeper into the risk mechanics too.
Deeper than the bumpers.
Oh yeah. On another screen, within the GEX module, it charts out the net gamma across all expirations, and it identifies a gamma flip line at $787.50 for MU.
Okay, let's unpack this gamma flip concept, because this is where the market mechanics get slightly terrifying, honestly.
Boots the trapdoor.
Right. If the dealers are buying stock as the price goes down to stay neutral and prop up that $800 floor, what happens if the selling pressure is just so intense that the price breaks through the floor anyway and crosses that 787.50 line?
Think of the gamma flip line like the balancing point of a massive seesaw. As long as the price stays above that line, the dealers are actively pushing against the momentum. They buy when it dips, they sell when it tops. They keep the seesaw totally steady.
Like shock absorbers.
Exactly. But the second the price crosses that flip line, the entire mathematical equation for the dealers just flips upside down.
So they suddenly have to jump to the other side of the seesaw.
Yes. And their weight accelerates the crash. Instead of stabilizing the market, they are suddenly forced to short the stock aggressively just to save themselves.
Wow. Which just adds fuel to the fire.
Massively. That triggers stop losses, which forces more selling, which forces the dealers to short even more. The structural dynamics change entirely, and the selling pressure just snowballs.
That's terrifying if you're holding a long position blindly. And the platform actually visualizes this risk in 3 dimensions, right?
It does, yes.
Because the sources show this fully interactive 3D map of the implied volatility surface sitting right below the GEX chart. It's mapping IV skew across multiple future expirations.
Right. And visually, it looks a bit like a topographical map you'd use for hiking.
With like mountains and valleys.
Yeah, but instead of physical elevation, it maps out market fear and greed across time. Because implied volatility is essentially just how expensive options are.
Right, how much fear is priced in.
Exactly. So by looking at this 3D surface, you aren't just seeing the invisible walls for today. You are seeing the terrain of expected volatility stretching out weeks or even months into the future.
So you can literally see where the market is pricing in massive future risks or, anticipating column Cs.
You can see the whole landscape.
Okay, so if I'm a trader, I now have the macro weather report. I have the 3D topographical map of the invisible bumpers and trapdoors in the market, but I still need a trigger, right?
Still have to press the button.
Exactly. How does someone take all of these wildly complex options, Greeks and 3D surfaces, and translate that into an actual timed trade execution?
Well, that transition from understanding the market's underlying mechanic to actually executing a profitable move, that is handled by TradeIQ's pattern logic module.
Pattern logic. The sources describe this as a multi-timeframe automated chart pattern scanner.
Yes, and this is really where the synthesis of the entire platform culminates.
Okay, how so?
The system is constantly scanning major watch lists, digesting literally every tick of data to detect structural breakouts and targets across various timeframes simultaneously.
And it does this completely automatically. Looking at the specific signals generated in the source material, on the ultra-short time frame, so the 5-minute charts, it is flagging bullish 520 exponential moving average crosses.
Right, very common day trading signal.
Yeah, and it fired this specific signal off for Alcoa, ticker AA, Ramaco Resources, METC, Duke Energy, DUK, and IBM.
And just to clarify the mechanics of a 520 EMA cross for anyone listening, it simply means the short-term price momentum, so the average of the last 5 periods, has violently crossed above the medium-term 20-period average.
It's basically a green light.
It signals a sudden, aggressive acceleration in price, yeah.
It's a momentum trigger.
Yep.
But the system doesn't just hunt for those quick 5-minute day trading setups. It is tracking macro structures at the exact same time.
It does it all.
Because it also flagged a 4-hour bull flag breakout for MongoDB, ticker MDB, noting the price finally broke above the resistance line of a prolonged consolidation.
That's a much longer-term swing trade setup.
Right. And it flagged bearish, one-day head and shoulders breakdowns for Amarin, AEE, and Marriott, MAR.
And identifying a macro bull flag on a 4-hour chart manually, that takes significant time and patience.
You have to sift through hundreds of charts.
Exactly. A bull flag happens when a stock has a massive, sharp run upward. So that's the flagpole, followed by a slow, downward sloping consolidation period.
It literally looks like a flag on a pole.
It does. And when the price breaks at the top of that flag, it often triggers another massive run.
Now, I want to play devil's advocate here for a second. Retail traders have spent decades staring at screens, manually drawing these exact trend lines on candlestick charts to find head and shoulders patterns or bull flags. There's an entire industry built on YouTube just teaching people how to draw these lines.
Oh, absolutely. It's a cottage industry.
So if TradeIQ is doing this automatically, is the real advantage of this software just the speed of the automation? Is it just doing what humans do, but faster?
Speed is definitely a distinct mechanical advantage, no question.
Right, because a computer is faster than a mouse click.
Yeah. By the time a human trader manually identifies a 5-minute momentum cross on 4 different tickers, the institutional algorithms have already bought the ask and the opportunity is totally gone.
You missed the boat.
But speed is merely a secondary benefit here. This software actually raises a fundamental question about what truly creates an edge in modern trading.
Okay, what is the true edge?
The true edge is not speed. The true edge is confluence.
Confluence. Let's break that down. How does the concept of confluence work inside this specific cockpit?
Well, think about the traditional retail trader. They sit down, they manually draw a beautiful textbook bull flag on a chart. It looks like a phenomenal buying opportunity.
The chart says buy.
The chart says the stock is ready to explode upwards. But because they are flying blind, like we talked about, they only see the chart.
Right.
What if they execute that buy order, completely unaware that $2 above their entry price sits a massive multi-million-dollar institutional call wall?
Oh, wow. They are driving a perfectly good technical setup straight into an invisible brick wall.
Exactly. The price hits the wall. The dealer hedging physically suppresses the momentum, like those bumpers in the bowling alley.
And the trade collapses.
The trade collapses. And the retail trader is left sitting there, staring at their screen, wondering why their perfect chart pattern failed.
Because they couldn't see the mirror behind them.
Right. The market makers didn't care about the pattern. They cared about their gamma exposure. The power of unifying these modules is that you can cross-reference the pattern logic with the GEX gravity well.
That is the ultimate aha moment right there.
It really is.
A bull flag breakout is infinitely more powerful and infinitely more probable if you can look at the GEX map and verify that the runway above the stock is completely clear of institutional resistance walls.
Exactly. The unified intelligence TradeIQ provides isn't just about executing trades faster. It's about making vastly superior decisions. Because, for the first time, the retail trader can finally see the entire board.
You avoid the traps and you lean into the setups that have both technical momentum and clear structural runways.
It's taking the blindfold off.
Man. So bringing this all together, if you're sitting at home trying to swing trade this market or just manage your own portfolio, this completely flips the traditional risk model on its head.
Totally where it's at.
The tools, the algorithms, the literal X-ray vision that were once entirely walled off in institutional server rooms in Manhattan, they're now being packaged into these highly accessible, incredibly dense cockpits for everyday users.
And honestly, the democratization of institutional-grade market mechanics is arguably the most significant structural trend in retail finance today.
Leveling the playing field changes the nature of the game itself.
It forces evolution.
And for anyone listening, if you want to actually get your hands on the controls of this cockpit, the source material did provide some specific logistical details on how to do that.
Yeah, it's not totally public yet, is it?
No, TradeIQ is currently in a private beta phase. So they are onboarding users in small, controlled micro batches to ensure the platform remains stable as they scale up all this massive data processing.
Which makes sense given how much data it's pulling.
Definitely. But if you want early access to test this out yourself, you need to go directly to their website at thetradeiq.org to request beta access. And they also mention you should subscribe to their channels to stay updated for new feature drops as they build out the interface.
It is absolutely a platform worth monitoring as it evolves.
For sure.
But, giving this level of firepower to retail traders, it leaves us with a fascinating, almost philosophical puzzle to consider regarding the future of the markets.
Oh, I always appreciate a good puzzle. What's the lingering question here?
Well, we open this deep dive by comparing the retail trading experience to a game of poker, where the institutions can see your cards, but you can't see theirs.
Right, the mirrored sunglasses.
TradeIQ is essentially handing everyday traders a mirror of their own.
Taking the sunglasses off.
But the financial market is a living, breathing ecosystem that constantly adapts.
Yeah.
So if retail traders eventually gain mass access to this exact same institutional-grade X-ray vision,
Yeah.
if millions of everyday people are suddenly seeing every gamma wall, calculating every 3D IV surface, and trading off automated confluence patterns in real time.
How long will it take before the institutions realize the cards are showing?
Exactly. How long will it take before the massive market makers and hedge funds are forced to invent an entirely new invisible game just to maintain their edge against a retail crowd that can finally see in the dark?
Wow. The mirrors might reflect the cards today, but the house always finds a way to change the lighting.
A completely new game played in the dark.
That is a brilliant and slightly terrifying point to leave things on. That is all the time we have for today's deep dive. Thank you for exploring this with us, and we'll see you next time.